Did you know that 53% of Americans believe that their taxes are too high, and only 3% of Americans believe that taxes are too low? Annually, the U.S. government collects $3.9 trillion in state and income taxes. And so with tax season coming up in the near future, that'd be worthwhile to have an in-depth discussion with Jon Rector. He's a CPA with Hamilton Jeffer. Jonathan, welcome.
Thank you.
Thank you so much for joining us today. So, can you tell us a little bit more in depth how did you get here? What do you do? What was your career path, and what do you do on a daily basis?
Yep. So, as you said, I'm a CPA at Hamilton Jeffer. I've been doing it for 11 years, which is a long time.
We're becoming old.
We are. We were both, Drake alum, but I started at Hamilton Jeffer right as my last semester at Drake University.
So tell us about that. So you were you went to Drake University. Did you know back in Nebraska that was something you wanted to do? I'm trying to remember. Did you start out at an interest in in accounting?
So as a little kid, I had two dreams. One was to be a professional athlete.
That's right.
Or an accountant. And so as I grew up and my body did not sprout much taller, I realized one of those career paths was not meant for me. So therefore, I chose accountant.
Yeah.
And when I came to Des Moines or came to Drake, I knew there'd be opportunities, interns, and everything with the business school. So I got connected and started at Hamilton Jeffer, met a bunch of really great friends, stayed in Des Moines, and have been loving it ever since.
That's great. So CPA is a certified public accountant. Is that what it stands for?
Correct.
Okay,
Correct.
Cool. So tell us the path. So you graduated from Drake with,
Yep.
What was your major at Drake? Was it accounting then? Or?
So I majored in accounting and finance.
Okay.
And in order to sit for the CPA, you have to have 150 hours.
On top of your education, correct? Or?
So normally when you graduate from undergrad, you have about 124.
Oh, okay.
And so you have to, a lot of people do 1 year of a master's. And then I sat for the CPA, took the first test, did not pass. It was very difficult. It was a very hard test.
Yeah.
And there's 4 sections on it, so I studied a lot harder the second go around and passed the next 4 right then.
So it essentially takes 4 tests to pass in order to get it. So and then become a master sensei. Essentially, it's what a CPA, master sensei.
Correct.
That's right. So what is the distinction between an accountant and a CPA? Is there much? Why did you like to do that? I guess
So, my career path. I chose doing tax.
Okay.
So a lot of times there's tax or audit. If someone's gonna be an accountant, especially a CPA, you're either a tax CPA or an auditor. And I didn't want to travel, and auditors do a lot of traveling, so I decided tax was for me. I would say too, CPA is public accounting. If you're in public accounting, aka you're working on audits for company or you're doing taxes, then you essentially need a CPA if you want to grow with your company. A lot of corporate firms and corporate accountants, you don't need a CPA, but a CPA is kind of like the stamp of you are a very professional and adequate or capable accountant in a specific areas. Yeah. So there's some really good accountants out there that are not CPAs. But obviously, if you're going to have someone do your income tax, you want to make sure they're certified.
Yeah. It's one of those things that, just the rigors of those tests and extra studying, and I just remember that year that when you're taking those tests. I mean, it's pretty intense. You knocked it out. So that's what's really good. So
there's a fun story. So I remember I would study at work, 8 to 5 or 6, whatever. And then I'd go to my basement, I'd take my laptop and, take the quizzes and work through it. And I'd get really tired because it'd be like 10, 11 p.m., midnight or whatever. So I'd lay down on the couch and I'd just put the laptop over my head and I'd start answering it that way. Because then when I'd fall asleep, it would just smash into my face. Yeah. And so I knew that I wouldn't just fall asleep and miss work or something like that.
Oh, for sure. Well, I think that with any accreditation like that, we can kind of say, you're a CPA, but it's good to kind of get some insight that it's real work.
Right.
I mean, it's challenging. And on top of that, I couldn't imagine working full time and having the duties there. So it is kind of, I mean, you just really, you want someone who's excellent, that really cares and has gone through the rigors of testing, and that's really good. So, so last 11 years, so Hamilton Jeffer, your firm where you work at, there's been a focus on tax accounting. Is that kind of what you your company specializes in?
Right. So our firm, we only do tax and tax consulting, and so we're busy throughout the whole year, which most people would say, how is that possible? But there's stuff we're working on. A lot of people we have extend the returns. So you have the busy season February, March, April, and you also have a busy season September, October. But then at the end of the year, we're working on planning, and then throughout the year, we're consulting on transactions and sales. So,
and let's kind of take a little bit of deeper dive. So, when you work with like companies, you're dealing. I mean, I don't know if you can disclose, but you've had clients that are worth hundreds of millions of dollars. Is that right?
Yeah.
So, what does that even look like?
It's a lot of zeros.
Yeah, that's right. Visually I could see it. Yeah.
I mean, there's people, we've worked on that. It's a significant amount of revenues, $1 billion funds or whatnot. And, but yet no, at the end of the day, it's always, just reporting the income, the deductions, and getting it all at the same spot. So, it's, in my eyes, like, it doesn't matter the vol or like the numbers. The numbers, how big it's, at the end of the day, it's what are we getting down to at the end? What's taxable? What's not? You try to give the same amount of service to whether it's this $1 billion fund or someone that's trying to figure out the simple tax code of for their small family of four.
Yeah. I mean, I have the smallest of small companies, and I mean, full disclosure, I am a client of Hamilton Jeffer, but they've done a great job. But it's like, I'm tiny. I just have, a couple employees, and it's like, I'm tiny. And then it's cool though to know that your firm will work with, smaller companies and ginormous companies. And that's good that's here in Des Moines that you guys will take on. If it makes sense. Yeah. So
one thing that's really unique too is that with our firm too is there's people that we work on that's coast to coast. And so there's a lot of people that have Des Moines roots. But there's people I've worked on a number of years I've never met. But everything in our system, in our world today, is so paperless, and stuff can be done, and business can have transactions, and you maybe never see a face-to-face meeting anymore. And so it's just it's a global commerce, whatnot.
That's really cool. So to know that here in Iowa, in Des Moines, you guys have nationwide clients.
Right.
That's pretty awesome.
Right.
I mean, that's really cool, and to have that here in Des Moines, and also just knowing that you do have multi-billion-dollar clients or hundreds of millions of dollars too. I mean, that's. I mean, it is a lot of zeros, but that's pretty cool to have that that ability to have the impact, and it's all Des Moines people, or Central Iowa people that are working there. So in a sense, Hamilton Jeffer, kind of a summary, you guys work with people like estates, right? Companies, small business.
So we essentially, anyone that files a tax return, we work with. So individuals, small business, corporations. We don't necessarily do corporations as in Fortune 500.
Oh, sure.
Because obviously they would have their own tax offices and whatnot. But so and so's corporation in Des Moines or whatnot. Partnerships, trust returns, estates, like you said, gift tax returns. And so pretty much nonprofits we do, and other specials, select service plans.
So if we take a deep dive into like pragmatically what you do when you work with individuals, so what you are doing as a tax accountant, you're a specialist in being familiar with the tax code.
Correct.
So state and federal, correct?
Right, right. So and that's the thing, is that kind of the difficult part with Hamilton Jeffer is a lot of times I'm working on a state that it's not Iowa, and so you have to be informed with the specifics of other states too. But obviously, everything we do, majority is going to flow back to Iowa. but as in that relationship, someone expects you to be a real estate expert.
Yeah.
So the people that come to us, expect us to understand the tax code, with their situation in mind.
Yeah.
And so sometimes that creates some complexity where you don't know their full situation and whatnot, or they're not disclosing everything. And so you have to ask questions that hopefully allows you to prepare an accurate return.
Yeah. I think it's important too. I've learned, I went straight from college to small business and as a real estate agent, but I didn't really fully understand the tax. I would talk to you some and tax implications, but kind of when I look at it from a tax code standpoint, since it is so complicated, essentially your job is helping advise your clients what they qualify for or to maximize that. And I think some people, they call it tax loopholes. I'm like, a loophole is something that it makes it as a negative connotation. It's like, no, the tax code was written for a specific purpose for people to qualify for, and that's kind of what you're looking for, right?
Right. So at CPA, my office, our goal is always that you would have everything reported accurately and timely, and then also that you have the most tax-saving, beneficial plan that you can operate in. Sometimes it's like we want you to always do the right thing.
Yeah, absolutely.
And so with our office, one thing that I think people kind of joke is an accountant. You only, they're just wanting the government's taking my money or whatever. And so the goal is that accountants, that you understand where you're at to get the money that needs to go to taxes, or that you get the refund that you deserve. And so we always all try to optimize to have the best benefit and the best relationship. And then it's easier too to plan going forward once you have an established relationship, instead of coming in, I'm there for a day or an hour, and you expect to have tax planning and things all figured out, and it's there's a relationship helps it to create what's the best situation for that person, and not just a 1 hour every year.
Yeah, and I imagine with more complex relationship or complex estates or companies, you probably have access to attorneys and financial planners, and kind of team up together to help people optimize what they want to do.
And so that's always part of the thing too, is that a person that has a good financial health, call it what you want, has their team working together, their financial planner, their tax guy, their accountant, their lawyer. So they're starting a new business, a new venture. If those people can be on the same board, and having the same mindset, it's going to be a lot easier process. It's going to be a little bit expensive at that time in that meeting, but it's going to save you money in the end, because you're not trying to fill someone in later. And there's a lot of times that people come to us and it's already too late. It's already been decided and done.
They closed the deal or
Right. And so, it's proactive. It's always best. And a lot of times you pay for a service, and so you expect something in return, and so that, with a CPA, you pay for what you get. So.
Yeah, absolutely. And I think that one thing that's important for me, the way I look at it, is the reason why I have a CPA for my small business is because I know the tax code. I know the tax code. I could track it down. I don't know how to consult and really know what things mean, and I probably could if I have the time.
Right.
But at the same time, it's you have hundreds, if not thousands, of outcomes. Working with so many different people. So the reason why I do it is just I believe that you have the best interest in people's in mind. And then also you're an expert in what you're doing. And then secondly, lastly, it's the benefits or what the qualifications that as a layperson like myself, I have no idea. So in a sense, I think your services pay for itself, because you just understand what people qualify for. Right. And it's kind of from layman's terms, it's if you go to Slumberland and they're having a great sale, but you have to show a coupon. If you don't have the coupon, they may not show it to you. And so I think an accountant CPA is someone that gives out coupons. Essentially, no, that's not.
We always know where the coupons
you know where the coupons are. You remember what was it, extreme couponing? Very similar. Along those lines. But.
No, and I think too is that one thing that we talk about in our office too is that as a CPA in our relationship too, is that we want to allow you to specialize in what you're good at. And a lot of people, it's like this accounting, doing the books, doing the tax return, that's not what they're excelling at. And it may take them 8 hours or 2 weeks to try to put everything together and get it figured out.
Yeah.
Whereas, we can have that relationship, put it together for you, and then you can specialize in sales, you can specialize in the marketing, or whatever aspect of the business that you're doing. And so then you're you're allowing that person to excel in what their role is, and by establishing a relationship with a person that is an expert in that role.
Absolutely. Yep. And I think the big thing is coming up in a few months, we're looking at tax season and when taxes are going to be due. And it's kind of fight or flight, with people. So it's easy for me at times just to say, I know this is going to come up, but I just don't even want to think about it. But it's so helpful to know that when you have hired someone that they're, as long as you get stuff in time and basis, they know what they're doing. So, okay, so what do you recommend? This is kind of random. I didn't ask this question beforehand, but what do you recommend when people see an IRS letter come through? So, in general,
shred it.
No,
that's not true.
That's
Do
a
not
joke.
shred it. Do
That's
not shred it.
We'll put a big sign, don't shred. That's a joke. Yeah. So when you see that, like what's the IRS trying to do? What's their heart about it? Or if they have a heart. No, they do. But what is their intent to send a letter?
Yeah. So I would say a majority of the time, people that get an IRS letter, I always joke that the IRS and sending letters is what allows us to have job security.
Oh, sure.
Because it freaks people out. It scares them. They think they're going to jail. They think they're coming after them or whatever. And I would say a lot of times it's, hey, you didn't report this 1099, you didn't pick up this, or we adjusted something on your tax return, so we adjusted your refund, FYI, you're okay. Yeah. Sometimes I've seen it where it's, hey, you may have to report this, you may not, this is just an informational letter. Yep. Other times it's, hey, we know you've done something with these transactions, you need to report these or else.
Yeah, sure.
And so, like, virtual currency, that's one thing they're kind of tracking down on right now. So and that's a new question on the next tax return for 2019 is that have you
so Bitcoin right
along
those lines
Bitcoin would be a virtual currency, right? And all those other ones, and so they're tracking and enforcing more and more on that. But I would say a majority of IRS letters are not necessarily enforcement, it's more informational. But when you do have ones that are enforcing, hey, you're overdue on taxes, you're overdue, you need to respond. You need to either get on the phone and call them yourself. You need to talk to your CPA, your professional advisor, or your attorney, whoever you may have working with it, and get everything squared away. Because if you start getting behind with the IRS and having stuff, they will garnish it from anywhere and everywhere. And it's not good to have. It's going to set you back.
The good thing is, like, as a small business, kind of learning that is when I dealt with the IRS, like they just had questions on things, and it's like it was not a big deal at all. So I encourage, just call, deal with it. It's not a big deal. Sometimes or it shouldn't be a big deal. If you've done something, you probably know that you should not be doing it.
You just have to endure the hour-long wait on hold.
Well, the nice thing too, having since 2013, I've been working with your firm. It's like when I've had questions, since you're my CPA and friend, I'll just do a screenshot and send it to you. And then sometimes you've taken care of it, or just maybe there was something that was missing and I got it to you or whatever, and then just take care of it. So, what's your best advice for families preparing for tax season?
Yep. So, I was thinking about this, and the biggest thing is to be organized. Obviously some people are very organized and detailed, and others of us are not. But the person that you have, all right, hey, this thing in the mail, it says important tax document. Yeah. Open it, save it, put it in a folder. And know, okay, hey, I received my W-2, I received my 1099. Other things you can do, obviously, saving your tax forms. Big thing too is to have, so I love spreadsheets.
You do.
It's how I operate. nicest compliment I ever got in my office was a coworker called my spreadsheet sexy.
Oh, wow.
I blushed at that one. I didn't really know what to respond or how to respond to that. I don't know what you say to that. But the other is, it's have a list of all your accounts. And so, hey, does this get a tax document or not? If it's a IRA, a Roth, I don't have to tax report necessarily. But all these other things, yes. Have I gotten it? Yes or no? A lot of times the tax office will send you an organizer and it'll say, hey, this is what you've had in the past. What is it this year? If you're doing it on your own, it's just good to have, okay, yep, I'm waiting on these two things. When I get that, then I can be ready to go and file. The biggest thing, though, that people necessarily don't have a good track on is like charity.
Sure. And
so I'd say with that, it's, when you make the gift, mark the check, save it, just put it in a spreadsheet. A lot of times at the end of the year, they'll give you a, gift receipt for the year, and save those. But it's always better that sometimes it's like you do it and maybe they didn't give you a letter later, or it was some other variation of a gift.
So even I think Salvation Army, Goodwill.
And the big thing with those is, save your little slip, but it's always good to have a picture of what you donated or an itemized list of what you donated so you can properly value it. Instead of saying, hey, I gave 5 boxes, $500.
Sure.
Or whatever it is. Why is that? Why is each box $100?
You're just going to throw it away. But
So, and there's stuff out there you can find of like a thrift shop value of whatnot. Hey, there's 25 t-shirts in here at $2 or whatever. And obviously there's times where you gave appliances or some bigger items and it's over 500. And if it's over $500, you have to have a more detailed listing of it.
Sure.
But, that's a big thing is that, with families, if there's any sort of change, did you get married? Did you have a kid? Was there any sort of change in, let's say, a relationship or family structure or, new kid or a passing or anything like that? That's going to be something that's going to have a significant impact on your filing. And so it's good to have the information for, say, the birth of a new kid and having their identification number or, a marriage and having your spouse's tax return from prior year too. So a easy way to check is if you have everything too is you compare last year's return to this year. Why is there a line filled here that's there's a number here but not over here? You're probably missing something, or you know why there's a difference.
Sure. No, absolutely. So with this being kind of real estate focused, what are some tax benefits to homeownership? What are some things that come to mind?
So obviously, if you're itemizing deductions, so there's a standard deduction, which is $24,400 for federal.
Is that for couples?
That is for a couple.
Okay,
so
got it.
$12,200 for a single or married filing separate. And so if you're over that threshold, you can deduct your real estate taxes, your mortgage interest, and so you can get more deduction. Lower your taxable income, lower your taxes. Now with like the new tax laws that have been passed, your state and local tax, which is real estate tax, is capped at $10,000. So that impacts some people. But your mortgage interest is not, capped at a certain amount, but you can only deduct, so on mortgages, if it's after December 15 of 2017, it's any mortgages up to $750,000.
Okay.
You can deduct the interest.
Sure.
If it's before that, it's up to $1 million.
Got it.
And one thing that changed too is like home equity loans. Those are deductible if you use it to improve your home.
Sure. And
with your original mortgage, when it's not over $750,000 if it's after December 17. Or $1 million before. So let's say I take out a home equity loan and I use it to pay off student debt, or I go to the Super Bowl,
That's
then
right.
you can't deduct the interest.
Got it.
But there's so much benefit of, I have these options. If I'm renting, I'm just paying them out. I don't deduct anything. If I'm, owning a home, I can deduct this on my itemized. And say you can't deduct it on your federal, but on the state, for Iowa, your standard deduction for married couples just over $5,000, you might be itemizing on the state.
Oh, sure.
And maybe not on the federal. And that's okay. You can itemize on the state even if you don't itemize on federal.
Yeah.
So you get a benefit at the state level and maybe not necessarily at the federal level.
Yep. And then the last thing, most common thing with tax benefits when you sell your primary residence.
Yep. So, yeah, when you sell, if you're a married couple and you sell your home and you have a $450,000 gain.
That's right. That's right.
Up to $500,000 is excluded.
Yep.
And if you have a loss, it's excluded too. So you have a huge loss and it doesn't count.
Yeah.
Which is, so you get some and you give some.
Yeah. Thankfully, it's not super common. It's more common to have a gain than a loss. But,
and it depends on your holding period. But the one thing, is that you have to have lived in the house for 2 of the last 5 years.
Yep. And then it's calling that your primary residence.
And it's your primary residence.
Yep.
So say you have a vacation home.
Yep.
And home you live at, which one's your primary home?
Yep.
And so the one you live at more.
Yeah.
The one that your dominant address would be. So that's a huge advantage of, hey, I've held this home for 20 years. Bought it at $200,000 and now I'm selling it for $520,000.
Yep.
There's no tax on that, which is really, and it doesn't affect your adjusted gross income or taxable income or anything like that. It's just a net, just no tax impact.
Yeah. One thing that was really neat, I had some clients last year, actually 2 clients, and one of them 2.5 years prior, one of them bought the property for $86,000. They put in probably about $15,000 into it, so they're at gross or a total all in about $101,000. But we were able to sell their property for $140,000, and that's like a really neat thing because it's like in 2.5 years, that's $40,000,
right.
there, and they're owner occupant there. And then the second story is very similar, bought for $120,000, then sold it for $170,000. So that was pretty sensational. So, but Jonathan, thank you so much for joining us today. We'll have you on again. We'll talk about investment properties another time and kind of get into, I work with some people that are looking into investments. So thank you so much for joining us.
Absolutely.
You're the man. Thank you.
Thanks.